Okay, let's get started, everyone. Hi, I'm Brian Walsh with the Wisconsin Center for Technology Commercialization, CTC. Welcome to Quick Chat. Before we get started, let me mention a few logistics. We'll start with a 25 to 30-minute conversation with our panelists today, and feel free to enter questions into the chat box as we go along. We'll also leave some room for a Q&A at the end. And this is being recorded, so we will eventually post it on the CTC website as well. So today we're going to talk about debt financing for startups. And this is something that might be overlooked as a possible source of funds for early stage companies. And to talk about the possibilities, we are joined by three financing leaders from the Eau Claire area who've often worked together to help small businesses in their region. And our panelists include Luke Kempen, the Small Business Development Director at Small Business Development Center in Eau Claire. And as a side note, the SBDC network is a sister organization to the CTC. Toby Lemahue, the fund manager for Regional Business Fund, and Blake Wilson, a small business lending officer at Royal Credit Union. And so, to get started, let's just start with a brief introduction from each of you. Tell us about your organization and your role, and let's start with Luke.
Yeah, good morning. Again, my name is Luke Kempen. I'm the director of the Wisconsin Small Business Development Center at UW Eau Claire. I am a CPA. I've been in the business world for about 35 years, including work with a large international accounting firm in their audit area, worked in private industry. I've owned my own business, and I did consulting on my own for 3 years, and then I joined the SBDC about 9 years ago and have been doing one-on-one consulting ever since. Mainly the consulting that I do is financial related, helping people get financing for their projects.
Okay, how about Toby?
Sure. Good morning, everybody. I'm Toby Lemahue, and I am the fund manager with the West Central Wisconsin Regional Planning Commission. And the Regional Planning Commission here in Eau Claire actually created the nonprofit Regional Business Fund. And that is the entity that administers revolving loan funds in a 7-county region here in West Central Wisconsin. We're based out of Eau Claire, and we have over $15 million in funds, and then those fall within 7 loan programs. And my role here is to oversee the nonprofit Regional Business Fund and to assist businesses interested in applying for those loan funds, again, kind of taking them through that full process. There's a limited staff here, so we kind of play a lot of roles in that process, more so than maybe just what Blake will talk about.
Okay, and Blake?
Yeah, hello, my name is Blake Wilson. I'm a small business lending officer with Royal Credit Union, also based out of Eau Claire. We serve the Western Wisconsin Metro Twin Cities area currently. Started in 1964. We've got a great business lending team here. We just found out we have the 9th largest loan portfolio for credit unions in the nation, so that was pretty cool. But yeah, 200,000 members, serving it seems like it's an ever expanding area. But yeah, again, small business lender here. So I focus on all business lending relationships, 350,000 and under currently. So it can be anything from a startup credit card or small line of credit to a fourplex or real estate secured. So kind of a little bit of everything.
Great. Thank you, everyone, for those introductions. So Luke, let's start with you. From a previous conversation, I understand that initial engagement with businesses often starts with you. So how often are you encountering early stage companies that are looking for financing, and what are some of the things you try to determine when you first talk with them?
Well, Brian, basically most of our work, one-on-one consulting, is for companies that are looking to start up their businesses. So about 80% of our clients are startup, and virtually everybody that comes through to us needs funding or some sort of financing. So now most of our clients are typical businesses that are out there. So they may be looking at purchasing a restaurant or starting maybe a Main Street type business there. And but there are quite a few that are probably in the technology area and things like that. So we really work with all types of business ideas on and what they have, and try to help everyone that comes to us. Typically, what we see when a client comes to us, what we're trying to do first of all is really assess the potential for funding. We want to see what their credit score is and things like that to see if they're credit worthy. We want to see where they are at with their business idea. Are they ready to launch, or are they in research and development phase, or do they need a prototype, or where are they at, and try to assess where that is. We'll also look at the project scope and needs. So depending on where they're at and if they're ready to launch or not, we're trying to gauge that need for financing up front, and then using that to help gauge where we might go for financing. We're also looking at the capabilities of that client. We're trying to assess that client's ability really to take their idea and make it happen. A lot of people come to us with good ideas, but a good idea is a good idea, but in order to have it successful, you have to be able to execute that idea. So again, we're looking for people that can execute their idea. We're trying to see if the idea is feasible. And then we're generally looking at trying to figure out what potential funding sources might fit this client's needs. Once we look at those things and gather information, we're also looking at potential referrals to others. As Brian mentioned, the SBDC is part of the Center for Technology Commercialization and the Business Intelligence team and so on in Madison. So we're constantly looking to try to refer our clients to other expertise, because at our offices, generally, we have pretty small number of consultants in our offices, so we specialize in different things. So we may reach out to another center and seek other professionals depending on what those client needs are. A lot of the work that we do out of the Eau Claire office is financial projection work and helping people with business plans, because that's generally what the bank's going to want to see, or the funding, the institution that's going to try to fund this startup and things. So, and there's really kind of a 3-step process for that, and we walk through that with our clients, and then go with that and help the client get prepared to meet with the bank. We also then, if we're going to work on projections, we initially help the client work through projections, and really it usually entails several drafts and several conversations as we work through these projections. And then ultimately we're trying to get the projections to a point where we think that they're ready to go to a bank, that the bank might be willing to consider funding that project. So that's pretty much it in a nutshell, what we do.
Okay, and then the path that leads to Blake and Toby is kind of right at that step.
Yeah, pretty much at that step. So once we've worked with the client and have those projections, and we think the client's ready to go to the bank, and thought through their projections and thought through their business plan and have a good plan in place, then we'll coach them up a little bit on meeting with the potential lender, and we'll also kind of coach them on the different aspects of financing that might be out there. So usually we'll propose kind of a financing structure as part of our projections, and that gives the bank and the lender a starting point to kind of consider what we're thinking for the client, what might fit.
Okay. So Blake, let's say Luke refers the entrepreneur to you next. What does that initial conversation look like?
Yeah, so that initial conversation is just that. It's just a conversation. Let's understand, who the business owners are, kind of what their idea is, what the goal is, what they want to provide to the area. So really, it's just understanding kind of what that is, and then we can talk through some early questions on, okay, you think you need X amount. Why do you need that much? Where's the money going towards? Is a loan option better for you because you'd like to set, I'm paying X amount every month, Or does the line of credit option look better because you want 10,000, but you don't know if you're going to need 10,000. So why pay back what you're not going to use? So very, very exploratory, just kind of asking questions, working to understand. And if they have met with Luke, then, let's go through the projections, help me understand, how you guys came to these numbers. But yeah, so we, like I said, just kind of talk through kind of the different scenarios. Sometimes, in early stage startups, sometimes there's equity on the personal side, or in some cases, it's easier to get a personal loan for a startup business than necessarily a business loan. So we just kind of talk through all those types of things.
Okay, and what are some typical things that these companies are looking for financing for, and what kind of services do you offer that are unique to the needs of early stage companies?
Yeah, probably the thing that makes us the most unique as a credit union, in Royal in particular. I've worked for a national bank, and being in the industry for a couple years now, I found that it's pretty normal for a lot of places to have kind of a pretty hard line at the 2-year mark, saying, there's no real lending other than maybe a business credit card before the 2-year time in business mark. Obviously, it's good to see that mark. It gives the business some more ground to stand on. But we're able to be a little bit more flexible with the size of credit union that we are, where it's not solely based on time in business. So as far as products and services, we've got obviously all the checking and savings and deposit accounts that you could need. And on the lending side, we do real estate secured loans and lines, equipment, auto, unsecured loans, unsecured lines, business credit cards. So all sorts of, just about all the major products that small businesses could look for to help jumpstart their career.
And have you seen repetition in the kinds of things that maybe a startup or early stage company is looking for money for that you don't see in other types of small businesses?
They're all so unique. A lot of them a lot of applications I get are very broad in what they're looking for. They know they want to start a business, or they've got an idea, and so they're like, can I get $15,000 to start a business? And that's kind of where the initial conversation comes in from there. Well, I'll reach out and have the conversation. Okay, what's the idea? What's the funding need? And then we work to try to pair their ask to the product and services that we either have on the business side, or maybe, like I said, it's a product or a service that the personal side offers that's better for them. Or it's reaching out to, maybe sending them back to Luke and saying, hey, well, maybe you should sit down and kind of figure out, where your next step should be. Or maybe there's a spot where you'll get to Toby later where maybe we can work together and find something. And we work with a handful of other different organizations in the community to help new business owners. And so we've got a handful of good resources we can send them to if they're not quite sure on their path quite yet.
Okay. And how likely is it someone would find services organizations like yours in their regions?
Yeah, I would say it's pretty likely. So Royal being a credit union, we do have kind of a set area that we can lend and work with. But in I'm sure in Madison, Milwaukee area, where I believe a lot of you guys are based out of, there's a handful of credit unions and banks and financials that you guys can work with. And a good portion of them, I'm sure, offer very similar things. So I'm happy to work with anybody that's got questions to try to get you connected to one down there. Or honestly, probably the best way to go about it is find some centers of influence that you guys know in the area and find a referral that way. I'm sure they've probably got a lender that they work with that that they're happy with, and they'll be happy to make that introduction. But also, I'm here to help if you need.
Great, thanks. I see a question in the chat box, and I guess I'll pause to ask that right now. Let's see, is credit a factor? If credit is a factor, what are the credit barriers that might prevent a loan? Are there other business activities that can make the startup more creditworthy? For example, revenue benchmarks, purchase orders, others?
Yeah. Yeah, so at the end of the day, we still very much look at the 5 C's of credit. So the first one is understanding the character of the borrower. I'll just go quickly through the 5 C's. So the character of the borrowers, that is understanding, the borrower's personal credit history. How does that look? If they've been a member at our credit union, how has that been? Have they, had a couple loans, paid them as agreed, that sort of thing. So that is a factor. We typically at RCU kind of the benchmark is 700 on a FICO score. But again, like the question asked, we have the ability to be a little bit more flexible with that than some other places. So we still very much look at cash flow. So is the income that you're showing and reporting, is it going to be able to pay the debt that you're looking for, plus the current debts that you already have? We look at capital, how much have you as the business owner invested into this? Are you coming to the bank or credit union looking for complete financing of the whole project, or have you saved X amount that you're ready to put in as well? And then also, if there is collateral involved, we take a look at that as well. And then the last one would be conditions. So understanding kind of the industry and the economic times and how that plays into it. But the big ones, like you said, are character, the FICO score, the history, and the cash flow. So those other things can help you out, if the credit score is down a little bit, do you have, solid income, or do you have a great business plan that can, kind of help offset that?
Great, thanks. So Toby, tell us more about your organization, how it fits into the startup financing or early stage company financing landscape.
Sure. So the Nonprofit Regional Business Fund was created to administer loan programs that were secured by federal dollars. So all of the programs that we have either had monies that have trickled in from the U.S. Department of Housing and Urban Development, so HUD, either via community development block grants, most of our funds were originated from, or the Federal Economic Development Administration. So those public sources of funds trickled through the Regional Planning Commission and then kind of go over into that Nonprofit Regional Business Fund. And we are here to fill that gap in financing. So we are here to assist businesses when they are not able to get that financing from, say, a Blake or another bank or something, or maybe they do have those more stringent criteria of 2 years of cash flow from the business being needed or something like that. So we're here to not compete with those banks or credit unions, but rather supplement those sources of financing that are available. So to assist them, sometimes we're working right alongside with Blake and we're providing a loan and he's providing a loan to that business startup, or sometimes Blake's referring them to me and then we're providing with one of our programs our own lending tool or a lending product to them themselves.
Okay, and the types of projects you're seeing is and it's kind of similar to what Blake said, is okay.
Yeah, so the only thing that would be different is that we don't have those, we don't have like a full service bank or credit union. We don't have checking accounts or credit cards or anything like that. We do not do lines of credit. We would just be doing term financing. So just a loan to a business for a certain use. It could be equipment financing. So there's a new piece of equipment that they need. Bank can't do all of it, or maybe can't do any of it. That's when we're stepping in. A lot of times it's maybe for some new business is starting up and they want to rent space in a certain, Main Street location, let's say, and they need some leasehold improvements or just start up working capital for a POS system and inventory and those sorts of things. So that's where we're filling those gaps. Typically, it's not as easy for a bank or credit union to finance those sorts of things when there's not a lot of collateral associated with those, or that like Blake alluded to, that that 2-year cash flow. So those are the sorts of things that we're typically financing for those startups.
And you have some different funds listed on your website. So what do those align best with early stage companies and emerging technology companies?
Yeah. So typically when I'm meeting with somebody, I'll kind of have them tell me what their project is, or what where they're at. Sometimes I'll refer them back to Luke and say, you need to go talk with Luke a little bit longer. Then they'll come back to us. So then we can kind of fit them in. I see typically 2 programs that we typically kind of funnel people through if they're a startup. The first one is the revolving loan fund that we have. And this is when we are partnering with somebody like Blake, and they're providing most of the financing for a project. And then we're providing a supplemental source again, because they can't get all of it from Blake and they can't come up with the remaining amount that's needed. A recent example of that was that there was a purchase, and this was for a startup because it was a new purchase of an existing company. We can still consider that a startup. So a new owners of a drive-in movie theater in Chautauqua. So there was bank financing that was going to provide most of the financing for the acquisition of the land and all the properties that were located on that particular lot. And the borrower was bringing something to the table too, but there was still a gap. So they still needed some financing to complete that package. So that's where we came in. And that was a startup, again, that fit into the revolving loan fund. With that program, we provide a minimum loan size of $25,000, but we can only provide up to 25% of the total project cost. So we do kind of need those other sources of financing that come in. And then the second program that we have that's very popular and it's very nice segue from what Luke does to then kind of comes to us, and it can't go to Blake. Typically they go to Blake and Blake says, sorry, can't do it. Is called our microloan program. And this is not an SBA product, even though there is an SBA product called a microloan. This is different. Ours is separate. So we can provide up to $30,000 within this program at 4%, again, with that turn down from a bank or a credit union. So we do a lot of loans within this program to startup companies that just are not able to obtain traditional financing. With this one, we don't require any matching funds. So even the borrower themselves don't have to provide anything down. So it's a little bit riskier for us, but that's again what we're here to do, is to provide that additional source of financing. One recent example for this is that we helped a couple in Hudson, Wisconsin, purchase a food truck. So that was something that the banks and credit unions over there were not able to assist them with. We provided them $30,000 to purchase that food truck. Fortunately, it was right before COVID hit, so we did provide them with a COVID relief loan as well. So hopefully, things will open up for them this year a little bit more.
I also saw, I don't know if it's still relevant, but the Technology Enterprise Fund is.
Yeah, that one, yep, and I'm happy to talk about that. So that one is unique in that it provides patient debt. So we define that as that the debt can be deferred for up to 2 years within that program. And that one is for larger amounts of financing between $100,000 and $250,000 to a startup technology company. So the example I always use is that technology company has an idea and they need to get that idea to commercialization, and then they can realize sales. But it's going to take them some time to do that. And that's probably what a lot of the people on this call are kind of dealing with. So there's that research and development and some prototyping, and all of that costs money and takes time. So we can provide financing to that technology company. There is a one-to-one match required with that program. Again, federal strings are attached to that program. So we have to have, for every $100,000, another $100,000 coming from somewhere else. It could be Blake, or it could be themselves or angel investors. But then we're able to just hold off on repayments for 2 years while all of that happens, and then hopefully by that point they're selling that product and they're realizing sales, and then they can pay us back. So it is a product that we have because of the federal strings attached to it. Typically we just haven't used it a lot in the past, Brian, but it is a potential, and we do talk about it from time to time. Okay.
Did any one of you maybe mention something? We didn't really talk too much about SBA loans, unless I missed it. Maybe a little. Can someone provide a little more detail about SBA loan opportunities?
Yeah, I can speak to it a little bit. So I know there's a handful of credit unions and banks down in the area that provide that. Obviously, a lot of the national ones, the Wells, the U.S. banks, the Associated Banks, some of those. And then a handful of credit unions. I think I saw on a list that Summit Credit Union is a big one down there, and it looks like they're, they say they're rated one of the top SBA lenders in the state of Wisconsin. So a great resource, as well as the WBD Wisconsin Banking. They're a partner that we go to a lot for SBA financing. But yeah, handful of options there. You've got the 504, which is kind of the big real estate, big equipment purchases, the need. A lot of what I would imagine, startups are using is probably the express loan. I want to say, I just pulled up the sheet here to get the numbers correct. It's up to 350,000. It is for up to 7-year terms, can be a term loan, can be lines of credit, can be used for equipment purchasing, soft costs, all sorts of different things. There is still a qualification piece to it, like Toby said, like the federal government's involved, so there's strings attached and whatnot. But in the right circumstances, it can be used. I was talking with another lender, and kind of the way he phrased it is the SBA is great, but they still it still takes a credible borrower to get SBA lending. A lot of times where they help is if there's kind of a shortfall in collateral, or something to that extent, they're able to step in and help the bank minimize some risk and extend and make the deal happen. But it still takes a credible borrower at the end of the day. But yeah, like I said, I'm sure there's tons of local options down in the Madison, Milwaukee area.
There's Luke, are you? I see
Brian,
Yeah,
just to comment too on SBA, I can give an example of where the SBA has helped out on a startup. We've been working with a company here locally in Eau Claire that has a play on solar technology, and they went to the bank to see if they could get financing directly from the bank, and the bank referred them off to WBD as a partner with the bank to secure a SBA 7A loan for $350,000 to help them fund the actual build out of some initial prototypes. So right now, the SBA has some really strong programs out there. They're waiving fees. They are making initial payments for a short period of time. Given the COVID programs that came out that are tied to the SBA is really pushing the availability of their programs out there like they never have before. So if in the past you heard, well, the SBA doesn't play well with the startup technology and things like that, at least right now for the next probably 6 months, the SBA is playing very well with a lot of folks in different programs. So I would not overlook that as an opportunity with that.
Okay, and a related question in the chat box is from Carol, who recently learned SBA loans that can potentially be forgiven for high-tech startups and women-owned businesses. Does anyone know anything more about that?
Right now, the SBA has so many programs going on with this COVID, with the bills that passed, especially the latest COVID relief bill, that they're still trying to get caught up with what's in that bill. So I wouldn't doubt there might be something out there. We have not heard of anything on it yet, but that doesn't mean these things aren't coming. Right now, the SBA is trying to focus on, there's a shuttered venue operators grant program they're trying to launch, and they're also trying to launch the restaurant relief fund grant program. So they can't keep up with the legislation that's been passed out there. So the easiest thing for them right now is to modify some of their existing programs, which they've done. And so if you've heard something, I would continue to research on it and see what you can come up with, and again, talk to your lender or reach out. You can reach out to your local SBDC office, and they can probably help you walk through what might be available specifically for you.
Would a regional SBDC office be maybe the best place to find your local SBA lender, or what's the best way to go about that?
Well, typically what will happen with the SBA is that a bank will ask the SBA to participate in the loan. Okay, so as Blake talked about, there's not enough collateral there maybe for the bank to lend on the full project. So they'll look at it and say, this is a really good project. Let's say it's a $500,000 project, and the bank may say, we're willing to lend $250,000, on our own, but we can't lend the full 500,000 that's needed. So they may say, but we're going to talk to the SBA and see if they might participate in this loan. And then if the SBA participates, like with a 7A loan, then the SBA would guarantee the bank's loan, and then the bank would lend more money because they have some collateral there. They have something that they were willing to lend, but they have more backing, that less risk with the SBA guaranteeing that loan.
Okay. So let's say Blake and Toby, let's say you have a candidate that's a good candidate for a loan. What's a typical lead time? What should they expect in terms of interest rates? Those types of terms. How do things compare across organizations?
Yeah, I can start on this one. So a lot of times it probably does start with an inquiry here at the credit union or the bank, and then can lead to Toby down the road. But our process is on the small business side. We've got it pretty quick, so we can typically get a decision, basically a yes or no within 24, 48 hours is our goal, as long as depending on what's being requested and if there's still more information to be gathered. But typically that's our goal, is within 48 hours to have a decision on a loan. And then, rates and fees and whatnot can depend based on what the collateral is, on what the project is. We do have some smaller business, like a credit cards or a smaller line of credit where there's no fees attached at all. And then we do have small origination fees for different term loans. And obviously when real estate's involved, that can extend the process 4 to 6 weeks, and you've got closing costs and other appraisal fees and other things that can be involved there. But that's typically when you're going to have your longest term financing, you're going to have your lowest rate. And so just to throw, I guess, some rates out there, I think he asked, real estate right now is anywhere from 3.5% to 4.5%. And on the business financing side, it's not like your typical home mortgage where it's a 30-year fixed rate you can get. Typically it's a 20 to 25-year term, or amortization we call it, and you can fix rates for up to 5-year increments. So it's not a full 30-year fix, but it's similar. And then when you get into the equipment or auto secured, rates are probably typically a little bit higher than they are on the consumer side. But they're still in that probably 4 to 6 range, and depending on the overall strength of your application, your history with the bank or credit union and your FICO, that can move the rate around a little bit, but that's a pretty safe range. And then when you get to the unsecured type loans, they're typically starting in the 7, and maybe it goes to 10, but typically if the rate's going to go over 10, it's probably not qualified and not getting approved at that point. But that's just kind of a general overview. And so the way it works when Toby gets paired in, saying if we're able to lend X amount, but they still need a little bit more, it would be 2 separate loans, 2 separate terms, 2 separate rates. So you'd have your loan here with RCU, and then you'd also have a loan with Toby and the Regional Business Fund. But I can let her speak to their products and whatnot.
Hey, Toby, anything to add?
Yeah, I guess our timeline, and maybe just, I guess, an FYI, if there are other entities sprinkled like us throughout the state of Wisconsin, and if you go to a more non-traditional lender, our process is 3 to 6 weeks from the time we get a complete application to the time you're getting your monies, depending on, kind of what's involved with that process. Everything that we see goes through a committee process. So I don't have any lending authority. None of us as staff have any lending authority. We have to take it through a committee process at every point in time. So we do our own centralized underwriting here and do credit review and credit analysis, and then we present that all to that committee. So that's typical timeline for us. And then for our terms, we have an interest rate 4% for most of our programs. We have a 1% loan product right now too for a facade loan program that we have. So it's a more obviously low interest rate. And then for collateral too, we're typically mirroring the bank's or credit union's position in terms of their collateral. So most of the times it's a blanket UCC filing on all business assets. That's called a general business security agreement. If there's real estate involved and our funds are part of that, we are taking a mortgage on the property. So those sorts of things, always personal guarantees are required. So those would be kind of the conditions of the loan and the kind of the collateral that we're taking. We don't have to have specific, I mean, we have collateral, but we don't have to have a specific collateral value because oftentimes we are behind an RCU or somebody else. So we're just filing that kind of behind the lead lenders.
And if somebody does get a loan, are there any other kinds of strings attached to, reporting requirements and certain types of interactions required with your institutions?
Yeah, so I can, on the credit union side, so for the most part, no, and it'll depend on what the product is. So if it is a line of credit, we do review those every 12 or 24 months, depending on if there's collateral or not, or a couple other factors. So then, potentially we would request financials just to review and see how things are going, see how the line has been used. If it was maxed out from day one and only interest payments since, that is a different review than if it was used and paid back like they're meant to be. But otherwise, if it's just if it's a straightforward term loan, 10,000 over 3 years, not something that we review on an annual basis. Only, that would come up if there was some mispayments or whatnot. We would obviously be in contact to see how we can help and understand the situation. But otherwise, no, not the normal.
We have some annual requirements. We do ask for updated financials every year, so tax returns of the business and persons involved in the business. We do sometimes ask for employment counts depending on which program they secured funds through. Proof of insurance, if that lapses, we have to kind of work on that because we always require insurance be on that business. So we do, but it's not too intensive.
Okay, and before I'm gonna go to a few questions in a moment here, but we talked about this a little bit. I think Blake, you talked a little bit about this already, but we're focused. This panel is focused on the Eau Claire area. Are there, for people in other parts of the state, how should they look for resources similar to the kinds that you offer? And again, I know Blake, you already talked about, kind of mentioned other credit unions. I think maybe Toby, yours is really very unique. So what can you tell us about other options that might be available?
Yeah, I would encourage folks to check with economic development corporations. So some of those are housed in the counties or municipalities. I'm sure Madison has one, Milwaukee has one, or maybe multiple chambers of commerces. To the WIBIC, Wisconsin Women's Business Initiative Corporation, I know is based out of Madison, and they even can provide loans up here. And sometimes we've partnered on deals where they've also been involved. And then I would also maybe check, touch base with business incubators and accelerators. I know there are a few in both Madison and Milwaukee as well. Sometimes they might have additional resources or just leads on other programs. As you know, and I'm sure familiar with, there's tons of resources that are available, but you just have to kind of find out who knows about those, and they're ever changing, so that gets a little bit frustrating. But I think you can check with those main folks that I mentioned. And I think the Luke Kempen that is going to be down in Madison or Milwaukee too, they're going to have a good starting point too, and kind of a typical process that businesses kind of flow through.
Luke, do you have anything to add to that?
Yeah, I was going to say to check with the local SBDC office. There's an SBDC office pretty much at all the 4-year campuses here in Wisconsin. There's 12 offices here in Wisconsin, so they can be a good source. One of the things I can say that maybe Toby and Blake can't is that I would be looking at a community type bank, a smaller bank. I would not, if you're a startup, I would not go to Wells Fargo or US Bank. They're too big, and they probably are not going to be very interested in your project unless you're looking for millions and millions of dollars, and you have the capabilities to support that. So again, a smaller community type bank or credit union would probably be the source for you. I think the other thing to understand is that is what's kind of illustrated today. a typical project has several funding sources. And so it's not just one bank or the regional business fund or something like that. It's partnering of funding sources to make a project happen. So you have to realize that typically it takes some time to put the pieces of the puzzle together for the funding sources.
Okay, so I see a question here for anyone that wants to take it. I'm in a biotech startup about to launch a product line this summer, and in about 9 months, we'll be seeking funding to ramp up inventory to fulfill projected sales demand. We won't have 2 years of cash flow. So are there any options / programs you suggest we should look into?
I would say, obviously it depends on how much you're asking for, on how much the ask is. If it's a smaller amount where you're looking for 10 to 15 to 20,000, a lot of banks and credit unions can definitely look at an unsecured option for that. Much higher. Okay, I think. Yeah, I mean, I'm sure there's great resources. I know we have some startups, they've got equity in their home that, maybe not always the best mixing business with personal use, but that's a lot of times the cheapest financing they can find. So that can be an option. And maybe this is one where Toby, you're the tech one. I don't know if that would fit in kind of into that ballpark. But it would definitely be good, like I said, reach out to the SBDC and find what groups there are in the area that provide that sort of financing.
Yeah, and it's hard to answer that question that, yep, go to do this, because you have to look at your circumstances and your specific needs. And so what I would encourage you to do is work with your SBDC. If you're about ready to launch this and do an initial project, I would work through a set of financial projections and work through the numbers. Now, I know doing projections on a startup is difficult, right? You don't know how many customers you're going to have. You don't know what you're going to sell. But by working through that business plan and those financial projections, it will open your eyes to a lot of different things, and it will help you consider and think through the financial part of this plan. And then I would take it to a bank, a small bank, and start having that conversation, because it's going to depend on a tremendous amount on what your individual project looks like and what you individually bring to the table.
And I'll add to that research and those projections that you do speak a lot to you as a business owner, as opposed to the business that comes a week before they want to launch and they're asking for $100,000, but they've got nothing prepared. They put no work into it. They don't know what they're asking for. They don't know what the money's for. So the groundwork, the preparation, you putting the time in, that's part of your capital that you're putting into it. That says a lot as a business owner, and it makes you as a lender feel a lot more comfortable and a lot more, you can really understand and see the passion in the project. So definitely is something to stand on.
Yeah, and I think Blake brings up a very good point there. To get financing, if you're looking to get financing this summer, you should already be 2 months into the process of working through the financial projections and getting things organized, because it can be anywhere from a 4 to 6 month process depending on what your needs are and where you're at and your circumstances. So you need to have good lead time to get the financing put in place. Don't expect to walk into the bank and have financing in 2-3 weeks. That does not happen.
Especially if the SBA is involved, that drags it out. But
yes, yep. Okay, and there's another specific question about where to go for PO financing. Would that kind of follow the same advice that you just mentioned, Luke, or something else?
Yeah, I guess I'm trying to understand what PO means.
So Izana, I don't know if you want to jump in and just unmute yourself and ask the question, or I'm guessing against
Um,
purchase orders?
Yes, I'm sorry about that. Yes, we do have a purchase order. We're
Okay.
working on producing a product for them, but it takes a lot more than the purchase order to release a product. So we want to see if we can match, basically use that PO as a collateral.
Yeah,
So
I think you have something there that's valuable and potentially could go to the bank and see if they would take a look at that and see. It's going to depend on the terms a lot on what that PO is. So if there's some money maybe up front that comes in on that purchase order, if there's a lengthy time to fulfill that purchase order, there's some money, down payment up front. But I think there's an opportunity there for some sort of line of credit or something like that on that purchase order if you're going to use it to purchase inventory to make a product that you're going to fill that order with. So definitely I would check with your bank again on that.
Mhm. Yeah, and just to add, with every type of collateral, there's some form of what we call a loan to value maximum. So there's a max that we're able to lend based on the value of the collateral at hand. So if it's real estate on the business side, for us it's 80%. If it's a piece of equipment like I guess we get a lot of construction, so like a skid steer or something like that, it's 65%. So yes, maybe they can lend to whatever the collateral would be, but there could be, kind of like Luke mentioned, with needing a down payment, there could be a max to how much. So maybe not the full amount.
Yeah, I think another thing is to look at that, whoever that purchaser is, if it's something that you're the only one that can supply, they may lend you the money to buy the inventory so that you can fill their need. So don't overlook your customer as a potential financing of what you need there for inventory.
We have time for a couple more questions from the group. If anyone has a question, just unmute yourself and I'll kind of give you a moment to do that. Okay. So one last question for the group, the panel here is there any, was that somebody just trying to ask a question? No. Okay. Is there any last piece of advice that you want to share with the entrepreneurs?
Yeah, I can start. The first thing that came to mind for me was the network, and obviously this is a great example of it. But there was a handful of networking things that I used to go to, and obviously it's been a little bit weird the last year. But one of them was called 1 Million Cups, not to plug them necessarily, but that's a weekly organization that meets, and an entrepreneur presents their new business or their startup, and their idea. But I'm always surprised at the number of, here in Eau Claire, the number of current business owners that own successful businesses that are there, like eager and looking to invest in new businesses and new ideas. So getting involved in stuff like that, where you can, meet other business owners, and maybe, you don't need to necessarily come for debt financing, but maybe you can find an investor, a partner, somebody already in the field that has the experience and funds to help out. And then the second one, which Luke and I hit on already, was do your research. Talk to your centers of influence, your accountants, your tax preparers, your lawyers, your bankers that all whatever industry it is. Those are typically the best referrals you'll find. And do your research. Put your sweat equity into it. And a no isn't always a definite no. It can be reworked, and it can come back looking better.
Okay. Anyone else?
Yeah, I guess in my case, I probably already mentioned this, but I think the most important thing that you can do is work through a set of financial projections for what your project is, and being prepared. If you go to the bank and you're not prepared, you've got one opportunity to impress them. It's like anytime you meet a person, you got 5 minutes, or whatever, 50 seconds to make that first impression. if you're well prepared, you're going to go a long ways to getting financing, or at least getting the bank to at least talk to you and start thinking about what you have going on. So again, work through the projections, see your SBDC office if you need help on that. They can help you out. You're also welcome to reach out to me if you have more questions. I'll certainly work with you individually too. So.
Okay. Toby, did you have anything to add?
Just kind of to follow up and kind of piggyback on what Luke and Blake had said earlier, was just to kind of start that process early too, to reiterate that, just that, once we get a complete application, there's been a lot of work that's happened before that. So I think just that, and then for us to, kind of move forward, that's not too bad in terms of the whole scheme of things. But let's say you work with somebody at the Small Business Development Center, that takes some time, and then you get it to Blake, and then Blake, he's able to give you something, but then not all of it. So then he's involving us. So there's a stepping stone process there. So just to, start that process earlier if you do have like a timeline in mind. And then I would also, not to say anything bad about Blake or anything, but shop around. I think Luke kind of mentioned that too. Just kind of see what's out there available for you. You might be able to get a better rate somewhere or better terms and conditions. And we do see that from time to time. Ours are what they are, and then we could partner with everybody else. And that's, I think, true for a lot of the other non-traditional sources of funding out there. And then just get folks involved early too. So having those kind of touch bases with Blake, like, okay, Blake, now I'm here. What do you need? And, just kind of moving through that process again, way ahead of time, as opposed to, kind of trying to shove something forward too fast.
Great. Well, Toby, Blake, Luke, thank you so much for being with us today, and hopefully our audience will have some takeaways here. I think they will. And before I say goodbye, I want to remind our audience that CTC is a Wisconsin state-funded resource to help small business and with emerging technologies navigate a path to commercialization. We offer one-on-one counseling on accessing federal commercialization grants, such as SBIR and STTR, microgrants to aid in the proposal writing process, pre-submission proposal reviews, and lean startup programming to help you get your innovative ideas to the market. So please don't hesitate to schedule a free counseling session with us. And the panel here has also mentioned the ability to reach out to them if you like. Thanks everyone for joining us, and we will see you on the next CTC Quick Chat. Thanks everyone.